See, what is the difference between stocks and ETFs? These are exchange-traded funds. And which one should you trade? Which one has a larger profit potential? And that's what we're going to talk about right now. You see, if you want to succeed with trading, there's three things that you need to master. The first is what to trade. And there's a lot of things that you can trade. Stocks, options, ETFs, Forex, cryptocurrencies, futures, right? The second thing that you need to master is when to enter. And the third thing is when to exit. And there's two ways to exit, either with a profit or with a loss. As we talk right now about stocks versus ETFs, we cover the first part. What should you trade? When trading stocks, there's pros and cons to trading stocks, right? One of the things that happens with stocks that regularly there is news that is moving the stock. News can make a stock violently move to the upside or the downside. This is why there are some ETFs. ETFs stand for exchange traded funds, and it basically means it is a fund of stocks that is traded like a stock. And these days there are many ETFs, and each ETF has a purpose. The idea here is when investing in an ETF that you are diversifying. Let me give you an example. Let's say that you want to invest in the S&P 500. And instead of buying 500 stocks, right, you just buy an ETF that is called SPY. So let me show you exactly what this looks like. So I'm going to show you here a chart of the SPY, and this is an ETF that is mirroring what the S&P 500 does. It is just way cheaper to trade. Right now, as we're recording this at the end of April, it is trading at around $300, just shy of $300. So if you would like to benefit when the whole S&P is going up, you can trade the ETF that is called a SPY. The cool thing is it trades like a stock, and therefore it's really easy to get in and out, and also fairly cheap. Compared to mutual funds that have tremendous management fees, an ETF usually has much less management fees, and therefore could be an alternative to mutual funds. One of the things with ETFs, they don't have earnings and they do not provide any dividends. Also, the cons of ETFs, the disadvantages is that it moves much slower. So as an example, today, the SPDR, which is the ETF that is mirroring the S&P 500, moved up 0.13%. Now compare this to some individual stocks that I like to trade, for example, OLN, that today moved 1.3%, 10 times as much. Or what is another stock, VSTO, that we were trading today, moving 1.71%, 15 times as much as the index. So this is why I personally prefer to trade stocks over options. And if you would like to know how I pick the stocks that I personally use in my trading, please go to a website that I set up for you. It's called mytradingroutine.com, that explains exactly how I find the best stocks to trade. But let's talk about a few key ETFs that you might want to know, because you might choose to invest in ETFs. And so one of them we already talked about. It is the SPY, the so-called SPDR, and it is mirroring what the S&P 500 does. If you want to invest in an ETF that is mirroring what the Dow Jones does, there's the so-called diamonds. The symbol is DIA. And you see right now it is trading at around 265. The whole Dow Jones, if you would buy all the stocks in the Dow Jones, would be at 26,000, right? But here, obviously, this is much cheaper, so it behaves exactly as the Dow Jones. If you like to trade the NASDAQ, there's an ETF for that is mirroring the NASDAQ, which is called the QQQ. No idea why they're calling it, but hey, you just need to know it's called the Qs, and the symbol is QQQ. Also, if you would like to trade crude oil, but you don't like to trade the futures market, you can trade an ETF, which is called USO, which is tracking what crude oil is doing. So if you're betting that crude oil will rise, you can just buy an ETF that is called USO. And if you believe that crude oil will go down, that prices will decrease, then you can simply sell this stock or this ETF that's traded like a stock, and it's called USO. Now, one more that I want to show you, it's FXE. FXE is mirroring the euro currency. So if you are interested in currency trading and you don't want to trade Forex, you can do it with an ETF. Now, there's many ETFs out there, and whatever you want to trade, whether you want to participate in gold or silver, you can do this with an ETF, and it is as easily traded as a stock. Now, one more thing that I want to cover here is so-called leveraged ETFs. And what does this mean? We talked about the SPX that is mirroring the S&P. So as an example, today the S&P was up 0.11%. Now, you can trade an ETF that is leveraged with a factor 2. The symbol for this is then SSO. And as you can see, today it went up 0.25%, exactly twice as much. So you're getting some leverage here, and for every point that the S&P goes up, this particular leveraged one called SSO goes up 2 points. Or there's even one that's leveraged with a factor of 3, and it's called UPRO, the Ultra Pro Shares. And you see, the SPX today was only going up 0.1%, and the UPRO was going up 0.35%. So as you can see, there are leveraged ETFs, and leverage is a double-edged sword. It works in your favor as well as against it. So if the S&P goes down by a point, this particular fund here, UPRO, would go down 3 times as fast. Very last thing that I want to mention here, you can also bet on a falling market. If it is screwing with your head that you say, well, I would have to go short, they got you covered. So for example, there is an ETF that is mirroring the S&P. Right now, as you can see, the S&P today went up 0.11 and this went down 0.11. So it is basically betting on a falling market. As the S&P goes down, this ETF will go up. So as you can see, you can make it as easy or as complicated as you want it to be. I personally do not trade any of the ETFs. And here's why. For me, the main disadvantage is that these ETFs are rather slow. Even if you have here a leveraged ETF, as you have seen today, the stocks that I'm trading has been moving 1.3 and 1.7% in a day. The ETFs, even the leveraged ones, only moved 0.33%. So therefore, I personally like to trade stocks. But it's important that you know the difference between a stock and an ETF, and I hope that now you know this, so that you can make an informed decision of what you want to trade. Keep in mind that stocks have earnings and dividends. ETFs typically do not have any earnings and do not have any dividends. ETFs are more diversified, and whenever something is diversified, it means that it moves much slower. Is this helpful? As always, make sure to subscribe to YouTube and hit like, as many likes as possible. And I hope that you enjoyed watching this show as much as I enjoyed making it for you. And if you know anybody who might find this video helpful, please feel free to share it.
Click on like and leave a comment and let me know what you think. And make sure to subscribe to this channel to get new videos automatically.